Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
Hello, everyone, and welcome to the Leaders in Payments podcast. I'm your host, Greg Myers, and on today's show, we have a very special guest, James Neville, the CEO of Yaspa. So, James, thank you so much for being here, and welcome to the show.
You're welcome. Thank you.
So let's start out by having you tell a little bit about yourself, maybe where you're born, where you grew up, where you currently live, a few things like that.
Right, the simple stuff. So, born in the north of England. You wouldn't think so by my accent, but actually born by the seaside. Still live by the seaside, although traveled a lot around in my younger years. But always been a fan of the water, fan of the sea. Went to university around these parts as well, over in Essex. I did my MBA at what's now Baines at Cass University in London, and just traveled a whole heap around during that period. I did my 20s was entrepreneurship, my 30s was, for want of a better place, investment banking, and then through to places like Just Eat and ultimately WorldPay, where I was the CTO for a wee while before their IPO. So quite a big kind of grounding in payments, both from like the acquiring side and the other side of the fence, so to speak. So seeing how the world and the industry has shaped itself over the last couple of decades. But nice to finally be, at the helm of a payments company, given the amount of positive change and interesting things going on that there always is in this industry. But it's a really, really interesting time to be shepherding a ship through all of this.
Okay, well, let's talk about the company. So tell the audience what Yaspa does.
Okay, so we're a real-time payments and identification business. So our kind of North Star as a company has been about connecting identity and money. So whilst we process account to account, bank to bank, real-time payments, however you want to call it, faster than anyone else across Europe and soon to be the States, we package that up with bank-based identity, so James Neville, One Long Street, etc. And we also can provide determinant financial health based on a kind of number of machine learning algorithms that we can put in place over the top of your transaction. So we have been working predominantly in the regulated space with a big heavy bent recently in the gambling arena. And we use the data we get on consumers to give operators everyone's warning of if somebody has kind of gambling addiction, gambling behaviors, or markers of harm that help them solve responsible gaming in a frictionless manner, but also enable them to open up play for those that have no problems, right? So we've been spending a lot of time with the regulators, UKGC and the Dutch equivalent, about what does affordability mean? When is somebody able to place a bet, place a wager, and what are the parameters of that? And hopefully kind of shaping the industry into something much, much more safe and secure and ultimately fun.
Okay, and how big is the company?
I should know. We were 71 or 72 yesterday, depending on who accepted an offer. We keep quite close track on it while we're small, but we're trying to keep ourselves quite tight-knit over the recent years, but we've had a pretty explosive kind of couple of years just gone past. So we are hiring like crazy. I believe we just stood up about another 6 people in our Leeds office this week alone. So starting to really, really grow the company, both in Europe, UK, and in the US over there, the main corners of the ship.
Okay. Yeah, I do want to dive into the U.S. part in a minute, but before that, you mentioned gambling. What are sort of the other verticals or industries that you serve?
Yeah, so everything that I call the regulated industries, those places where there's an element of kind of KYC, AML obligation, and typically there's a higher level of fraud than let's say just straight up e-commerce where it's a pair of Nike. So you're putting money on account, taking money off account, crypto, FX, trading, high value goods, car dealerships, those kinds of transactions where you have to have an idea that James is really James behind the transaction.
Okay. And then you closed a round of funding not too long ago and are opening an office in the U.S. in Atlanta. So maybe tell us a little more about that.
Yeah, so I spent a bit of time in Atlanta over recent years. I mean, it was WorldPay's home in the US when I worked at WorldPay. I was over Atlanta a lot. Georgia's lovely. It's hot, but it's also a good epicenter for payments. So if you're going to enter the US on a kind of fintech angle, particularly payments, it's kind of Jacksonville, Atlanta, maybe a bit of kind of Miami in there somewhere. But it's the old Bell AT&T hubs that sprung up over the years, and that's why the transport network is so cool. So we parked ourselves in Atlanta for now. We raised 12 million US from Discerning Capital. They've also invested in Midnight in the UK, one of the kind of challenger operators, Pickleback in Australia, and they have a very strong focus on the US regulated gaming sector. So that's a big target for us. So we feel we can really shape the industry while it's in its relative infancy in the US.
Okay. So in the US, will you mainly be focused on gambling, or will you do some of the similar things you do there?
Similar things, but I think the immediate kind of problem that we can fix is around financial health. And it's one of those industries where, as it's in its kind of nascent days, like there's a strong opportunity to put that in place whilst the industry grows. Yeah, I think over the next couple of years, we'll expand out. We already kind of work with crypto exchanges and some of the other kind of parties I mentioned, but for the US, I think as the states by states regulate, they've got a lot of financial health type requirements that people are putting a bit of a hat tip to, but not really. I'm not saying not taking it seriously, but doing the minimum that they have to without realizing the journeys that Europe's been on to provide greater revenues through responsible gambling. So that's why I think taking our propositions into the US will really help. And there's obviously a lot of stuff going on with 1033 and that going through the courts, and what does that really mean right now? But the US is a very different beastie to Europe, as I'm sure as an American. You're very commercial as opposed to being driven by regulation. So we ended up with PSD2 and also PSD3 through kind of the EBA and the likes regulating, whereas the US, the commercial businesses like Acquia and MX and Plaid and all those kind of aggregated businesses, they did really well by just going to the banks themselves and forming commercial relationships and building outside of a regulated context. So, I think 1033 is going to be fascinating for really opening the sector up and normalizing the sector as of the regulations in PSD3. But opening in the States is a lot easier with the infrastructure evolving there on a commercial context than it has been in Europe, I think.
Okay. Well, what would you say differentiates your company from your competitors out there?
Yeah, I mean, again, we're the fastest people to make account-to-account instant payments. We spend a lot of time in data rather than just kind of talking to the bank themselves. We have kind of proprietary algorithms that kind of predetermine whether slow payments will settle within the 2-day kind of window of SEPA credit transfer. The same is true of ACH being, same day or next day or ultimately kind of 24 hours. And we're able to forward funds in advance of settlement with no risk to ourselves or the merchant. And then the biggest differentiator is, of course, that we provide financial health on transaction, which nobody is doing. And if you want to provide a solution in the regulated sector, you've got a whole palette of tools that you have to aggregate, anything from IDV to PEP and sanction checks, all of that stuff together, maybe device fingerprinting, maybe TM or transaction monitoring around all this. We wrap that in one singular transaction, and it's kind of our goal to be able to arrive to an exchange or an operator or a website and go deposit money and be able to do that entire KYB kind of a C process from start to finish.
Okay. And sort of how do you go to market? Do you have like a direct sales team? Do you work through partnership channels? How do you go to market?
I mean, all of them, as every payment company does. Direct is where you want something, your merchant wants something a bit more kind of bespoke. They want to work with you and do something maybe a slight different. But we're very, very flexible in that. We provide some very custom solutions for some of the bigger merchants we work with. And then, of course, we go out through the PSPs, through the gateways. We work with the EMIs of Europe. All of the guys across various different sectors. And then we're also white labeled within other people's platforms. So it's a kind of some people consume other people's PSPs into their white label, and sometimes we're in that PSP. So it's a bit of a mix of everything, but kind of our goal is to focus on the places and the services and software that our customers consume their services from.
Okay. All right. Well, when you step back and take kind of a look at the big picture, where do you see payments headed maybe in the next 3 to 5 years?
I mean, everybody's going to be talking stable coins and the Genius Act. So let's just see where that kind of settles in the US. I mean, we've had this whole kind of Web3 and kind of meta stuff that didn't quite kind of take off in a lot of respects. But, Bitcoin's still here to stay. Ethereum's still here. Stables, central bank currencies are still becoming a thing. The UK Bank of England had a program operating for a while. I think, we'll start to see bank issued stables. We'll start to see kind of country issued stables over the next kind of a minimum, I'd say, kind of 1 year from most of the kind of bigger economies of the world. And then we'll start to see kind of broader acceptance and kind of insurance and liability shifts and all those kind of things that need to happen for an ecosystem to function. I think beyond there isn't really a kind of obvious trend in a new payment mechanism or method, but I think then we get into everybody's talking agentic AI and something else, outside of the realms of arriving at a Google and looking for a flight and then buying the flight. It's going to be more about having your own personal wallet. Maybe that includes stables, maybe that includes your cards and other APMs, and you go on tokenize access to that agent to go off and find the thing that you want and deliver it back to you. I mean, personally, I don't trust agentic AI right now because the recommendations I get from Google, they're giving me recommendations for orange trainers, and I'll never wear orange trainers. Well, actually, I might. I'm a McLaren fan, but you see the point, right? So, I think there's definitely have to be a level of control in all this. But that's, I think, where automation is going to go, and it's going to become a little bit more around kind of self-sovereign identity, self-sovereign payment methods. What do you want to spend where? What are your limits that you might provide out to agents? And what data do you want to share? And maybe some of that data needs to be deeper for certain sites and shallower for others. Maybe you need multiple identities, pseudo identities to kind of pay for stuff. Some stuff you may not want to pay with certain kind of direct from your bank, as James Neville. Maybe you want to pay with that with a stable coin or something kind of non-identifiable. So I think there's all kind of mixes of stuff coming, but agentic is definitely where I think the world seems to be pushing itself forward to.
What are your thoughts on, I know, like in the US, the whole account to account, it's used when you're paying utilities and things like that, but there's often people talking about, using account to account at the point of sale. So maybe more like a Pix in Brazil or, some of those kind of things. What are your thoughts on kind of that account to account payment getting down to where the consumer's actually using it almost in a point of sale kind of thing?
So we struggled with that for a while, which is why we ended up in more the regulated space. Like let's take kind of pause out of the equation for a second, but if you arrive at somewhere to buy a new pair of Nike sneakers and you've got Apple Pay and PayPal and everything else that's quite habitualized for people, pay by bank, you put it there, account to account, you put it there, but it's not going to get any traction, right? Mm-hmm. Habits are formed over decades, and those decades go all the way back to, my dad being shouted Visa from a Moroccan souk and he went and bought a carpet and, all those kinds of things. But, the predominance of those trust marks and brands just create repetitive behavior. So trying to get consumer education to a point where somebody goes, I would prefer to pay with Chase directly. Why would someone prefer to pay with Chase directly when they can go like double click on an Apple Pay type solution? So there's definitely places where, as we found over the last few years, that it works better. And again, those places where the money needs to be traceable, where you need to have something more like A2A than a card, those places where there's maybe more fraud on the transaction, you want to know that that's really the person behind it rather than some anonymous card that could have been, passed through Alpha Bin or Mr. Bin through a darknet site. So there's plenty of use cases. I think we tried a bit of pause and we revisited it again about a year back, and we did a lot of work for the casinos in London. So the big ones they have kind of payments in, ticket out type machines. And that's gone well. It obviously is better because you can go to higher limits than cards can, et cetera, but the problems that you have at point of sale is really around kind of communication, rejection. Like cards are almost universally going to accept unless there's insufficient funds, where there's kind of bits on the account to account chain that tend to be more fragile. Like some of the banks in Europe has such an implicit fragility to them that if something doesn't work, you need to sit there and stake for a while, but you can't keep a customer waiting at a POS terminal for more than about 30 seconds. You need to either see that the money's moved or you need to refund the money. And there's all kinds of unhappy paths that happen with a solution like that. So I'm not sure that POS is necessarily the right solution right now, but in the US, you've got a much better way of moving money via push, which is effectively just consent from an open banking transaction can then be used to wire money from one ACH participant to another, whereas in Europe you've got to go through kind of a push transaction on your mobile phone. So I think the US is inherently kind of more open, could be more fraudulent, but we'll see how it all pans out. But I genuinely say that POS isn't really a place for account to account.
Right. Okay. Well, let's change gears a little bit and talk about you. You talked a little bit about your background, kind of brought us up to the CTO of WorldPay, but maybe what led you to starting the company? What was the impetus of that?
I mean, a number of things. So I've been in and out of the payments industry, as I said, on kind of both sides of the acquiring fence. I looked at what frauds really meant. Bitcoin was emergent at the time that I was at WorldPay. All these things revolved around passphrases and pins and 3D Secure, and everything kind of came together at one time. Everything from GDPR, PSD2, SCA. It was actually it was a number of things, but a board meeting that we had at WorldPay where we were discussing all of these things coming together and what would happen if somebody had to type their name, address, date of birth, mother's maiden name, and all kinds of other things at the point of payment. Well, conversion was going to fall off a cliff. So the discussion was there must be someone who tokenizes identity like we tokenize a PAN, like we tokenize a card. There wasn't. So okay, maybe we should go off and do a business that did that. And that's actually where it started. So we're originally called Citizen. Like our first proposition was essentially taking all the data you'd require at kind of point of sale, remote or online for GDPR and PSD2, rolling that all together in an identity token that somebody could kind of pass around and reuse without having to retype all the stuff. And we ended up working with the banks quite heavily for about 1.5 to 2 years. And then the banks got a little bit scared by GDPR. When GDPR came along, they came to force and didn't want to talk about identity anymore, which was that was the time that open banking became a thing in Europe. 2017, we started getting the kind of account information component in the UK. And then 2 years later, the payment side. So we decided, well, if we're going to be in the payments ecosystem, we should just be a payments business, because if we're handling the account to account identification piece, why not do both? Why rely on another participant? And that's kind of where it went. Aside from that, I've had some great leaders work around me, and I've some terrible leaders work around me as well. And I genuinely thought I could build a company that had a great culture that could be really successful, and also where people could be really successful and enjoy their time working here. And I think we built a really strong culture of trust and actually a lot of fun as well. As if you speak to people that work here, we've got a very flat hierarchy and we all work really, really collaboratively.
Okay. Well, what are some things you're passionate about? So maybe one work-related passion and one personal passion.
I mean, work, I'm a techie. At the end of the day, I grew up with my dad's Unix terminals when I was like 8 years old. I was playing Adventure to start with, but, I learned Shell when I was a kid. So I've always been a techie. Anything that involves tech, and you can see all this music hit around me as well. It's also very, very techie. So, very similar types of things. I like generative music. I like writing code that writes music, so to speak. So I've got a whole heap of stuff around here that does kind of algorithmic, kind of textural audio. So that's a bit of a passion of mine. Used to run sound systems when I was in my 20s. So, we used to run around and play loud music to people. And that's always been a passion of mine. You can tell I'm a quite loud individual generally. And then my hounds. So I've got, you won't see them, I've got 4 Weimaraners under the table just here behaving themselves, implicitly waiting for their afternoon run. But they're my personal trainers and how I keep fit.
Okay. I want to go back on something we kind of touched on it, but I think maybe given kind of the business you're in, not so much the payment side, but the identity side, how is AI sort of, I guess 2 parts. You've probably been using machine learning and AI for a while, right? It's not a new concept to what you're doing, but maybe, how do you see it improving what you do moving forward or changing things?
Yeah. So I think at the moment we're focused on things like categorization and identifying things that are outliers and going much more kind of broad brush terms. We've been looking at fixing kind of last mile, not chargebacks in our world. It's more kind of requests for information, kind of RFIs, and connecting lots of individual parties that way. So kind of automating that kind of conversational process. We're not going to put it in front of customers yet. I know Klarna tried to do that and backtracked on it very quickly. I think as a business, we try to keep a very personal touch to things. I just don't think AI has really got that personal touch just yet. But as we move, deeper into transaction monitoring and that side of the business, 100% absolutely. To unlock transactions that existing tools say are suspicious, being able to really deep dive on those and release them a lot faster.
Okay. So you've obviously been around payments for a while. So if someone came to you, maybe they're right out of university or school, and they say, "Hey, James, I'm looking to get into the payments industry and build a career there," what would you tell them they should do to be successful?
I'd probably ask them why. I mean, I actually fell into it myself. I mean,
Me too.
Yeah, right. But it's one of those industries that, because it touches so many things, there's always kind of a pathway back to payments. I've tried to run away from it for years, where you always end up back in the same thing. But it's just one of those kind of foundational industries. If you think of money generally, it's always going to be around. So I wouldn't necessarily, maybe I'd ask why, but where? Why do you want to be in payments? Is it because you love money? Are you interested in, making it move faster? Are you interested in the fraud aspect of it? What really floats your boat? For me, it was always technical. Again, I was a techie. I spent a long time when I was at Sporting Bet building, orchestration platforms that you'd hit a certain level of kind of ingress of funds, and you have to shift to another provider. So the technical challenges were there. So I think if you're a techie, join a fintech, but join a startup, but just learn. This industry is absolutely rife with acronyms. It's acronym soup, right? We've just said GDPR, SCA, and that when we're all fine with it, but anyone else that isn't in payments would go, "What the hell are you talking about?" That stuff comes second nature, and it takes a wee while. So anyone that wants to evolve, it's not scary. There isn't all this stuff that's unintelligible. You just need to immerse yourself in it for a while. So I would find somewhere where there's an open floor, it's a fintech, there's a product guy around, and just listen and learn that way. Won't take that long.
Okay. Well, before we close out, just kind of open the floor, see if there's anything else that maybe we didn't talk about that you wanted to mention. So kind of open floor for you for closing comments.
So look, thanks for delving into the background. I think not so much that I haven't mentioned, but I definitely think there's another category opening up around kind of data and payments generally, and combining things like device fingerprinting, combining bank identity or card identity, maybe even MasterCard's been moving more into kind of digital services, and financial health, just to create more of a space where the transaction can be trusted. And I think as everybody starts to think in those terms, as chargebacks become more rife and fraud becomes more rife, I think we all start thinking in a similar kind of term, connect identity and money will be in a much better space.
Okay. Well, James, I think that's a great way to finish up the show. So thank you so much for being here. I really appreciate your time. I know it's very valuable.
You're more than welcome. Thanks so much for having me.
Great. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.